Hello, everyone. Good morning or good afternoon, depending on where you are at the moment, and welcome to our second live analysis webinar for the weekly analysis for the week ahead. My name is Mohanad Daoud, and I'm the Chief Markets Analyst at PU Prime. Thank you so much for joining me today, and let's have a quick conversation about the markets. What are we expecting through the week ahead? What are the most important events on the economic agenda, as well as the technical analysis and expectations on the major financial assets? Just to start off on the same page, if you have any questions, please leave it in the chat or in the comments or the questions section, and I'll make sure that by the end of the webinar, if not answering, or if not your question has already been answered, I'll be answering all of the questions one by one. So let's start. And just to make sure that you guys can see my screen, please write in the chat box below whether the screen and the audio, everything's working fine. And yes, we are starting today on Monday, the 6th of May, the beginning of a new trading week. What a trading week. The previous one was basically very, very volatile. We had very big major movements on the major financial assets. This week, it's expected to be much, much lower in tone. We have a few things to look at on the economic agenda. However, it's not that big of a deal because the previous week it was the NFB and it was the Federal Reserve meeting or the FOMC meeting. We discussed this in the previous week webinar, but this one much, much lower in tone. Let's start and have a look on the economic agenda on Monday, the 6th of May. Basically, it's currently 12 or 5 minutes past 12 in the afternoon. So the London session just started around 1 hour ago. We can see that markets are not having a big movements during today. That's because we are having a bank holiday in the United Kingdom. So basically, a lot of the volatility coming from London today is off. They are having a bank holiday, and that's why we're starting the week with a very, let's say, soft trading session. So going forward today, we have very, very few and not so important economic news from well as the German economy. This is not something that we should be concerned of. The data is already out like 5 minutes ago, and no any movements that happened in the markets. Moving forward to tomorrow, Tuesday, the 7th of May, and quickly, as I can see, nothing of interest, but we have the FOMC member Kashkari speak. Let me tell you that what happens is, okay, so the previous week we had the FOMC meeting. We had the announcement to keep the interest rates. We had some prediction or expectation that we might not see rate cuts during this year and so on. What happened has already happened. That was the Federal Reserve's comments during the last week. However, from one meeting to another, we must always focus on the FOMC members or the Federal Reserve members, because by giving those speeches and comments, they sometimes hint that we might see a shift in policy, because we only get a FOMC meeting once every 6 weeks. So during those 6 weeks, we have data released. Let's say the FOMC meeting last week was on Wednesday. Immediately after the meeting, by 20 or 48 hours, we had the NFB data. So what are the comments by the Federal Reserve members on such data? Because this happened after the meeting. So during those 6 weeks between one meeting and the other, we should always focus on the FOMC member speeches. And tomorrow we'll be having Kashkari speaking from the FOMC or the Federal Reserve Board. We also have the international or the energy, the EIA short-term energy outlook. That's the Energy Information Administration. They basically publish this monthly outlook on the oil markets. Sometimes it helps, sometimes not. So we will be looking at this, and we'll be having to send you this kind of summary of this outlook, the monthly one. And other than that, we don't really have anything of notice, but we might focus also on the consumer credits. Why? Because basically when credits are high in the US economy, this means that people are willing still to buy and to consume things. And this means that basically inflation will not be so easy to go down. On a scale from 0 to 10, how important are those events? Last week we had events like on a scale of 9 or 10 out of 10, but Tuesday, maybe 4 or 5 out of 10 when it comes to volatility. And that's why on investing here, we have 2 out of 3 stars, which I personally agree with. On Wednesday, we have the crude oil inventories, which is the monthly thing that we always look at. We have the European Central Bank non-monetary policy meeting, not so important. Yeah, it's only the crude oil inventories that I'll be personally looking at on Wednesday, the 8th of May. Again, 4, 5 maximum out of 10. On Thursday, we have the biggest risk event or the major event during this week, which would be the BOE or Bank of England interest rate decision. So we had the FOMC last week. We will be having the Bank of England this week. So currently, the interest rate on the British pound is 5.25%. Expectations by the market are basically to keep interest rates as it is. However, when it comes to the Bank of England, the most important thing is to see the votes by the members. Okay, so how many members voted on a vote cut or a rate hike or to keep it unchanged? So basically, this meeting shows expectations that all of the 9 members will be voting on keeping it unchanged, which means that on the next meetings, probably they will not be changing the interest rates on the British pound. And we also have the important initial jobless claims. Again, it's a weekly figure for economic events. So 4, 5 out of 10 on importance. Basically, when it comes to the Bank of England, yeah, it will be having a lot of volatility on the British pound. And we conclude the week on Friday, the 10th of May, with the GDP or the economic activity coming out from the UK. And I think that's it. We have another FOMC member, Bowman. And Barr. So 2 speeches on Friday, Bowman and Barr from the FOMC or the Federal Members Board, and the GDP from the British pound. So on a scale, let's say, let's make a list of the high volatile currencies that we expect during this week. Number 1 comes the British pound, because on Thursday, we're having the interest rate decision. On Friday, we are having the GDP data. Other than that, the US dollar, which of course affects the euro, affects the gold. We are not having major events because we have had a lot of them during the last week. So we expect, or I personally expect, moderate volatility during this week. Of course, we will keep monitoring the geopolitical events. Let's start by having a look on the technical analysis. And yes, if this is your first time on the live analysis webinar, I basically start off with my charts completely clean, and we love to do this top-down analysis live. So let's do it, and let's start with the dollar index. So the dollar index basically on a weekly time frame. What I always want to see only from the weekly time frame is the weekly candle and how did it close. So let's focus on the last 3 weeks. You can see this one, right? This candle. So after a huge and a bullish candle, we had this with a very small body. This showed that maybe we are approaching resistance, or maybe that the bullish momentum is, getting lower and lower. The following week, focus, guys, we're not talking about an hourly candle or a 4-hour candle. It's a weekly candle. So candles on a bigger time frame, they definitely tell you a lot about the events that happened during this week and about the supply and demand, what happened during this week, and how traders, either on the bullish or on the bearish side, decided to end this week. So that's why I really focus on candles when it comes to the weekly time frame. The following week basically failed to register a new high, and we had a new low, a very small body, which also means that we were starting to move bearish, and that's why we had this previous week a great bearish candle that we had during the previous week. So this this means something really simple. We have some sort of resistance here, right? So if we see from here, yeah, we definitely have previous resistance, which is around 106.50, to be honest. And to be clear, we mentioned this during the last webinar. So that was a previous resistance. We tapped into this resistance during the last 2 weeks, and we're starting to see very good rejection from here. What are we expecting this weekly candle to do? Because guys, if you can just expect one candle on a weekly time frame, you have expected a big move on the smaller time frames. So the previous candle was bearish. Okay. After hitting resistance, what are the chances that this candle will go higher? I don't see that as a high probability. I see it on the other side. The high probability is to continue lower, right? However, in order to continue lower, what should happen, or most of the time will happen, is that this candle will go up a little bit, right? To form this upper wick and then continue lower. So we don't have any highs or lows on this weekly candle. What I'm expecting to see, or most probably will happen, is a move higher to form the high of the weekly candle and then move lower, break the low of the previous candle, and print a bearish candle on the weekly time frame. So my bias on the dollar index on the weekly time frame is bearish. What's happening on the daily time frame? A daily time frame shows a clear break of structure. Remember the break of structure? We explained this during the previous webinar. So we were moving higher, a high and a low, a higher high and a higher low, an equal high, and then we had a lower low, which is a shift in the market structure, or as we say, the break of structure, and we are moving lower. However, and yeah, if you're trading with a market structure concept, it's a break of if you're coming from a classical background, yeah, this is a double top formation because we had this top here, momentum failed to print a new high or failed to, break above those highs. So it's a double top. We had a break of the bottom between them, and this is a shift between an upward move and a downward move. However, on the daily time frame, we can see that the last three candles were bearish, super bearish. Do you think that we will continue moving lower? Bear in mind, on the weekly time frame, we said we might see an upward move just to register the high for the week. So from here, although I'm bearish on the daily time frame because I'm bearish on the weekly, we might see a little bit of a retracement to the upside, right? On the 4-hour time frame, we are already seeing this because this huge rejection that we are having, it's a 4-hour time frame. So we were moving lower, we had a great rejection. We are starting to slightly see some bullish price action from here. So it definitely makes sense. On a weekly time frame, we are expecting a high to be formed on the weekly candle. On the daily time frame, we have been moving lower for some time. A retracement might be due. And on the 4-hour time frame as well, we have just broken below a major support. That was a support that we tapped into once, twice, 3 times, even 4 times before breaking. It's definitely, I think, would be retested because it's a key level of support. We broke below, and we broke below with volume. So I would personally really love to see an upward move to test the levels of 105.60. This level will be the high on the weekly candle, and then we will continue to move lower. This is what I personally believe will happen on the dollar index this week. Nothing much to say on the euro because most of the time they are just the opposite side. However, on the weekly time frame, we can bullish, bullish, and then bullish. So we are having some sort of higher highs and higher lows. Someone is saying some bad audio lag. So are you guys having some troubles with the audio, or is it some individual case? Please let me know in the chat. Same issue. Sometimes it falls away. I think it might be some issue with the uh, connection. Hopefully, it will continue to be good. So that's for the euro. I think it's bullish on the weekly time frame. I can see it's bullish. Nothing pretty much to say about other than that. It's bullish, 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 bullish. However, again, the weekly candle, we might see a move lower to register the low for the weekly candle before moving higher. What's happening on the daily time frame? Move lower, retracement, a move higher, retracement, and then a move higher again. I think this is a very interesting level to look at on the euro. It's a level of resistance that we rejected during the last week. Okay. So I think that this upward swing will end near this resistance. We will head lower for a retracement before heading higher again. So it's just an upward trend, a normal upward trend. Move higher, lower. We are currently near the highs for this upward move. We are expecting a low, which will be the low on the weekly candle before continuing to move higher. So it's pretty much nothing more than what we said uh, on the dollar index. However, it's on the opposite side. What's happening here on gold is basically bearish. I is a bearish continuation. We had one candle, two candles in bearish. However, let me tell you that because gold is trading near all-time highs, we haven't seen this before, so we don't have previous price action, I mean support or resistance. So it would be really naive for me to say that because the last two were bearish, so this one should be bearish. It shouldn't. However, I'm telling you that to me, gold is basically in a sideways range. I'll not be trading gold unless I see either a break above the previous week high, which will be a bullish candle to continue moving higher and retest the all-time high, or a move lower to break the previous week low, and then this will be my continuation for a bigger retracement. Bear in mind, if we're gonna see on the last swing here, we have already reached the 50% Fibonacci retracement during the last week. So although the last 2 weeks were bearish, I probably see that this week might be bullish on gold. And don't forget our analysis on the dollar. We have much information or much economic agenda events this week. So normally I would love to see the inverse relationship between the dollar and the gold playing out, which means if I'm bearish on gold, I'm bearish on the dollar, this means most probably I'll be bullish on gold this week. Yeah, I can see here that's a bottom formation. The first move was great with great impulse move or volume to the downside. The other one, yeah, we had the lower low, but it was not so far from the previous one. This means that on the 4-hour time frame, we will definitely have a bullish divergence. Yeah, that's what I'm talking about. So that's a retracement. When a retracement shows a bullish divergence, I believe that we will be testing the high end, 23,000, 23,004, 2,346, sorry, which is the high on the weekly time frame. So 2346 should be our target. A break above will be to target the 2400 levels on the weekly analysis. Let's see if you guys have any questions. If you have questions, please leave it right now, and I'll be getting back to them by the end of the session. Okay, now with the US oil, what a bearish move we had during the last week. Basically, we have nothing to say on the weekly time frame because, yeah, it's very bearish. 6.8% drop only during the last week. The price action here doesn't really show where are the supports and resistances. So we have support here. We have support here. Another one here. So it's really close to price. Okay, from a short-term view, let's say we had a move lower, retracement, move lower. I think we'll be retesting this level that we just broke. So that was a key level of resistance, $80.50 per barrel. I believe this is potentially somewhere we will be heading for during this week. It was the previous support. Let me just make it so clear for you. $80.50. We break below. We are having this upward move on momentum. So from here, I'm basically seeing that we might be heading higher to target. First of all, 79.22, 79.70, and then 80.50. Those are my targets on oil during this week. And if you also check the Fibonacci retracement from here, I think this will be somewhere around the 38.2% Fibonacci. Yeah, so the 80-50 levels that I'm looking at falls between the 38.20 and the 50% Fibonacci. So if we had this huge move or the brilliant move to the downside during the last week, and we're going to retrace part of this move during this week, I'm looking somewhere between the 50% and the 38.20, which also has previous price action here. That should be my target on oil during, oh, that's a very good price action zone here. So that was resistance. We broke above, became support. Another time support. And this will be resistance. Again, if you are from my school of analysis, which is the market structure or the way I follow, this is basic price action, support, resistance. However, if you are someone who works with the chart patterns, yeah, I've just seen a head and shoulders. That's the left shoulder here. We created support. We went above to create the head. Again, tapped on the same support. The right shoulder was here. We broke below the neckline. A retest is what I'm expecting on oil during this week. And we will be moving lower. Sorry. We'll be moving lower exactly this target, which is the distance between the head and the shoulder. So let's say on a medium term expectation, I'm expecting that oil will continue moving lower to $74 per barrel. This is not something that you can capitalize on. Why? Because we are having talks about ceasefire in Gaza. We are having talks about geopolitical tensions everywhere. So oil is definitely something that is affected by news on a daily basis. And that's why personally, I'm not a big fan of swing trading at the moment. You can be a swing trader, that's totally fine. You have all my respect, but to me, I love having those intraday trades. So for this week, I'll be looking for long positions or buys. And once we tap into this level of resistance, I'll be looking for shorts. And let's conclude this session with the US Dow Jones. Again, guys, if you have any questions, leave it in the comment section now so we can answer it before we end this session. The Dow Jones on a weekly time frame is nothing but bullish. A move downwards. Okay, we had this candle which said that the move lower was losing momentum. We started having other bullish candles, higher highs and higher lows. So I'm really expecting that we are heading higher on the Dow Jones during this week. On the daily time frame, we have a double bottom pattern. Okay, what seems to be like a rough estimate of a double bottom, because what we're having here is a move lower. We had a bottom formed, a lower high. We were supposed to break this low and continue lower if we were going to have a bearish trend. So I was expecting lower lows, lower highs. I would have loved to see that. We had an equal low. And guess what? We are breaking the highs of the previous high already. So that's a shift from a bearish move. We had this huge bottom or double bottoms, and we're moving higher. So I'm personally bullish on the Dow Jones during the week. We can say nothing more than we have just broken above resistance, 38,550. That's on the US Dow Jones. That's also a previous support. So it was support. We broke below, retested as resistance, went lower, again tapped on it as resistance. We broke higher. Yeah, we might see support here. Or I mean, we might see a retest to the levels of 38,550. And on the 1 hour time frame, yeah, we will be heading lower for a retest because this momentum here is not awful. Okay, we are not able to move higher. We are having a bearish divergence. So I believe that in order to continue, we must retest the levels of broken resistance, which is now support. So I'm looking at 200 pips lower. After I see bullish price action from here and that we respected those support levels, I'll be having a long position entered on US Dow Jones. Okay, so I have a question here. Is it a general rule if, like you mentioned on DAX, is going bearish, gold will be bullish? Let me correct you. Do you mean the DAX, which is the German index, which is this one? That's the index for the German stock market, or you mean the USDX, which is the dollar index? So if you mean the USDX, which is the dollar index, most of the time, let's say 70–80%, there is an inverse relationship between the dollar and gold because gold is denominated in dollar. When we say today gold is $2,300, it's in dollars. So if the dollar is more powerful, you will be able to buy more gold because it's now cheaper in price. So there is this inverse relationship. And this not only happens with gold, but sometimes happens with oil. However, there are some exceptions. What happens if people are buying dollar and at the same time you have people buying gold? Both will go up. They will be both bullish. So it's an inverse relationship, but it's not a complete inverse relationship. And in statistics, we find it's an inverse relationship with a factor of error. I hope that it's not too complicated. But yeah, 70, 80%, it is an inverse relationship. But because I see traders a lot of the times, if he thinks that the dollar will go up, he doesn't analyze or look at the gold chart. Okay, I'll just buy dollar and I'll sell gold. No, you are doing it wrong. You are giving the market a lot of exposure. Yeah, DXY. Okay, yeah, I've already answered this. Hopefully it's good and well explained now. Is there a way to study this webinar later? I was thinking of the same too, if we can get the record, please, or a link for it later. Yeah, it's definitely recorded, but let me check with our marketing team. When are they willing to uh, release those webinars? Because yeah, it's with the marketing team. So I would be checking if this can be shared to YouTube or not, and we'll let you know. I think that comes to a conclusion of our webinar today. Thank you so much, guys, for attending. But let me just take a screenshot quickly. You click here for those people asking for the recording. So we have proof that people want this to be recorded and released, not only recorded. Yeah. And I'll do my best to provide you with this recording. Would you like spoiling this session? Sadly, I really apologize for any technical issues that happened during this week because I'm currently, changing my office, so I'm having another office. However, when I fully settle in my new office, I'll make sure that the perfect audio and video will be provided to you guys. Thank you very much for your comments, and I'll see you guys next week, same time, Monday on 12 p.m. GMT +4, and we'll talk about markets. Thank you so much, and I'll see you next week. Stay safe.